but one use case is we have a partner called Credit Smarts, and they do $8 billion a year in secured auto. And when you start to tokenize everything from the application all the way till it trades in the secondaries, and I'll let Joy finish this part because he can speak to it better. Even on the loan servicing, we have, for instance, like one of the fields is encumbered status, right? So I can now look on a public blockchain and I can see that there's a lien against that asset, where it's been pledged as collateral to somebody else. Otherwise, if it's not on a public blockchain and we can't all verify it to be true, again, it's just another Excel spreadsheet with something potentially missing. And when you have the servicing and everything on chain, we can all agree, like that loan tape, you might have 3 weeks to make a bid. Well, loans go into default and out of default every day in delinquency. And so it's not a living, breathing portfolio. The data is not, but you're bidding on a moving target. So it's really, really hard to price credit, and it's really hard to do it when you don't have the correct data. And then, when you think about the efficiencies, some of the things that will get disrupted are like title transfer insurance, right? If I can cryptographically prove that you owned it and now I own it, well, what am I willing to pay to prove that, it wasn't a good trade, right? Like, I know for a fact that's true. So title transfer insurance costs are going to go to next to nothing. Securitization costs. Think about when you look at loan securitizations, they're typically reserved for $100 million plus portfolios. Well, why is that? The reason is because it takes 7 months or more to do a securitization, and it costs $700 grand to millions of dollars to put together. So you're not going to do that for a $5 or $10 million portfolio. You're not going to spend $1 million to sell it. And so, but what is valuable about the securitization? Why even go through the hoops, right? Over those 7 months, you're going to have a rating agency like Kroll come in, and they're going to rate it. The only other valuable thing that's done is you get a CUSIP on it. Well, now it's a registered security when you get that CUSIP. My broker-dealer can get a CUSIP for $300 in 24 hours. So the hilarity in all of this is, in a securitization, most of these people, when they're selling these loans and these portfolios of loans, they're sending it to a Magnetar, to a Fortress, right? Fortress doesn't care what Kroll rated that. They don't give a shit how Kroll rates anything, right? They've got their own Stanford PhDs that know how to price this stuff better than Kroll does. So securitizations are going to go from prohibitively expensive, only being done by investment banks, to, you'll be able to do them, slap a CUSIP on it, because it's on blockchain, and I'll show you later how you can just easily bundle the loans, put it up on our ATS within a day. So I think there's just a lot of disruption and market participants that are rent seekers sitting in the middle. And then when you start talking about custody of those loans, this gets really interesting too. Choi and I have been meeting with FINRA and the SEC for years about this, but more recently we did what's called the CMA on our broker-dealer, which means that we want to change and add some features and capabilities to it with their blessing. And when you think about custody is about control. So in a decentralized world with MPC, what we do with our wallet infrastructure that we built is we inject the investor's private key into their mobile device. If you're using an Apple device, it's your iCloud. Android device, it's your Google Cloud. And unbeknownst to you, when you do the Apple Face ID, we retrieve your private key from your device. You don't even know you have it. And that's incredible and good, because the second that you trust individuals with a private key, or their seed phrase, maybe they don't write it down on a piece of paper, maybe they do, maybe they lose it. If you lose your iPhone, even in a horror scenario in this case, when you restore it, it's back from your iPhone. So investors can't lose it. But again, the investor has that private key. So who's in custody? In a multi-party computation wallet, the investor has one key, we have one key. And so there's multiple parties that actually have the true custody. And when you think about what is the whole business model of the largest custodian, State Street and Boney, in a decentralized world where the investor has one key and you have one key, you don't need a Boney or State Street. You don't need a third party to validate that you own those, right? And we're not in control of that wallet, neither is the investor. And so I think you're going to see huge implications on the banking side and on the securitization side and the asset management side, because when you do something like an MPC wallet, you get rid of custodians entirely. And so that has huge implications. And it has even bigger implications on the banking system.